Hi, everyone. I'm Anthony Pastore. Welcome to UBS Trending, and thanks for joining us. Private equity can offer differentiation in a portfolio by providing access to a much larger pool of opportunities and across various stages of a company's life cycle compared to listed markets. Some of you watching today might know about it, and some may not be as familiar. So to tackle that and join this conversation is Jonathan See, Global Head of Client Solutions and Strategy for BlackRock Private Equity Partners. John, great to have you joining us here on the show. Private equity is such an interesting investment conversation and opportunity, so thanks for giving us your overview. But I wanted to ask you, maybe you can give our viewers a little bit more color on what it means to invest in private equity so we can level set here today.
Absolutely. Happy to be with you all here today. Private equity investing is about investing in the growth and transformation of privately run companies. What we're really doing here is backing entrepreneurs and management teams to have effective stewardship for the growth of these businesses throughout their life cycle. These could be early stage startup companies working on disruptive new technologies. It could be family owned companies looking for expansion capital, or indeed very large businesses looking to transform themselves, to grow, to move into new markets. So private equity investing cuts across really all industry sectors, all aspects of the life cycle of businesses and around the globe. At the end of the day, private equity investing is about effective stewardship of these businesses. It's patient capital to help these businesses grow. And many investors look to invest in private companies as a diversifier in their portfolio and as an opportunity to outperform other asset classes.
Terrific, John. Thank you. That's a great way to start. And so let me get into more details with you, because at BlackRock, as I mentioned right in the intro, you are a member of the Private Equity Partners business. Why don't you give our viewers today a little bit more color on what that means to BlackRock to have that particular business?
Absolutely. Our private equity team has been around now for over 20 years. We manage approximately $45 billion in private equity commitments, and we're part of the alternatives business at BlackRock, which currently manages about $325 billion around the globe. In our private equity business, we have 180 professionals across 3 continents today, and we manage capital for both institutional and individual investors. We invest that capital really in 3 primary strategies. We invest in direct co-investments into companies. We invest in secondary transactions, as well as, to a lesser extent, primary fund investing. And so through these, investors have an opportunity to build effectively diverse global private equity programs.
And, you know, I want to talk about co-investing with you, John, especially obviously here in this conversation. It's very apropos with private equity. So what does that actually mean? And what is it about private equity co-investing that you think attracts sponsors, investors, fundraisers, and where, you know, those are the attractive opportunities where, you know, with investing for clients?
Absolutely. So direct co-investing has been a core strategy for our team over the last 20 years. It is a segment of the market that has been around as long as the industry and is not going away. In fact, it's growing. And what we're talking about here is investing directly into companies, but doing it side by side with other leading private equity firms. So from the perspective of these private equity firms, what we're doing here is we are an equity financing partner. We're helping those private equity firms to consummate the transactions, in some cases helping them to source and structure it. And in doing so, we're a value-added partner to help those private equity firms pursue their own strategies. For our investors, what we're doing is building an appropriately diversified portfolio of many different companies around the globe. You can build a diverse portfolio of businesses in different sectors, geographies, sizes of businesses, and indeed, ultimately, with a range of different private equity firms with whom you're co-investing. So the goal here is to find what you believe are some of the best private companies to back, with the ideal private equity sponsor who's helping to drive the equity value creation. Another benefit that draws investors to this strategy is that each investment is double due diligenced, if you will. The lead private equity firm who is bringing the transaction to the table is obviously doing their own underwriting. the co-investment organization is also doing an independent layer of due diligence on top. So you're able to source from around the globe for a range of ideas, double filter or double due diligence those transactions to go into the portfolio. And in many cases, the private equity strategies are more cost effective in the way that the terms are set versus traditional private equity firms.
Terrific. So, John, here's the $1 million question, and maybe quite literally, actually. We know that there are lots of reasons to invest in private equity. You're talking about them here. I mean, they're a little bit more illiquid in nature. They certainly play offense in times of stress, which is where we are now. So, with all of the recent volatility, and as we all have seen and have read and hear even in our own CIO, we expect that volatility to continue for the foreseeable future. Where do you think the opportunities are today and looking forward into next year?
Absolutely. Well, one of the important factors of private equity, we used the word earlier, patient investing. When you're committing to any private equity fund, this is about investing over a multi-year time frame. So it is important for anyone looking at this asset class, not just to look at the market today, but to think ahead several years. That's the first important part. Secondly, while we look in the market today, we are seeing a lot of volatility. It can be uncomfortable for some folks as they're looking at it. But that disruption and dislocation also creates opportunity. Here, when you think about where these opportunities can come from, we are actually seeing situations where we see divestitures or corporate carve-outs with large parent organizations that need to transform themselves and sell off assets, maybe to delever themselves. We're seeing opportunities to consolidate industries where you may roll up certain industry sectors through a platform play. We are also seeing small and mid-cap companies, maybe if they have a liquidity crunch, they're looking for a refinancing or bridge financing. And indeed, on the growth equity side, there are many attractive growth companies today who may be looking to do a refinancing or need that next round of capital to continue to survive in this market. So it's important to separate what we see going on in daily stock price fluctuations from longer-term value creation that you can accrue from backing leading private equity companies. So again, patient capital, thinking through cycles, and investing over the long term. The final point I would say is private equity, generally speaking, has been an attractive place to invest with a chance to have premium outperformance over public markets through long periods of time. What's interesting is when you go through periods of disruption and downturns in markets, there is research out there that shows that the premium returns actually have an opportunity to expand. So that's something to pay attention to in these times.
Terrific. John, thank you so much. Yeah, I mean, it is an interesting time to have this conversation, clearly, with the volatility. And as you mentioned, you can have a really well-diversified portfolio in private equity. There's a lot of differentiation in that portfolio, providing access to much larger pools of opportunities. So really good way to think about, certainly investing. And then for those who are watching, we always recommend you talk to your financial advisor to make sure that this is right for you and your risk profile. But John, great conversation. Really and enjoyed having you on the show today.
Thank you so much.
Great. Good to see you. Jonathan Sieg again from BlackRock Private Equity Partners. And for more information on anything we're talking about here at UBS, about private equity or anything else that we have going on, especially from our Chief Investment Office, you can visit our website at ubs.com/views. Plus follow us on social media, Facebook, Instagram, LinkedIn, and Twitter. Plus all of our past UBS Trending episodes are available on demand on the UBS YouTube site and on our website, ubs.com/studios. Again, as I mentioned, make sure to reach out to a financial advisor to have that conversation about investing in your portfolio. Until next time, I'm Anthony Pastore. We hope you have a great day, everybody. And remember to keep your eyes on what's trending. We'll see you soon.